Kitco Mining special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Do equities currently present a once-in-a-lifetime opportunity? This is Paul Harris for Kitco Mining at the Vancouver Resource Investment Conference. And to help me answer this question today is Michael Gray, partner at Agentis Capital Mining. Michael, welcome back to Kitco.
Thank you very much, Paul. Good to see you so soon.
It's been a lot to talk about today. 2023 was a tough year for the junior sector, for the equities. Commodity prices are relatively good. Yeah. So why is the junior sector suffering so much?
Yeah, I think, it's a great question. Last year, I really felt there would be a reset at this time. There'd be some optimism because 2023 was very, very tough. What it comes down to is, I believe, in the institutional side, the institutions are not coming down into the explorers and developers. Part of it is that they're seeing redemptions. They have concentrated portfolios. 10 or 15 years ago, they had 80 positions. Now they got 35 for some of the main resource funds in Canada and the US. So that's part of it. And they're seeking to manage liquidity. A lot of the juniors just don't have liquidity. So we're seeing a focus on some exceptional stories and some of the returns that keeps the institutions very interested. But I think the liquidity is a real issue for the sector right now.
But we're also seeing this among the seniors as well. I can't remember the exact figures, but if you look at Newmont, for example, compared with a year ago, they've absorbed Newcrest Mining and all the value that represents, but their share price is way down from what it was a year ago. So, in some terms, you could argue they've lost value, despite the fact they've taken a big step forward in their overall strategy.
Yeah, I think long term that will serve them well to be the biggest gold mining company in the world, to add that copper, which is really important to Newmont, and in talking to Tom Palmer, to add that block cave expertise. So I think longer term, it was a brilliant move for Newcrest, and they are probably, them and Barrick for gold are the go-to companies for the generalists and the gold fund managers. So I think the multiples may have been eroded a little bit for Newmont, but if you look at the mid-tier producers, they're still trading on average 1.1 times price to NAV in general. It's the developers that have really suffered, and explorers trading at very, very low multiples. So that's kept some of the resource funds away as well.
One of the recent pieces that I wrote about the gold sector was looking at the Canadian gold developers. There's 5 or 6 of them that have just brought their mines on stream or about to in the coming quarters. And pretty much across the board, with only 1 or 2 exceptions, building a mine really hits them and causes their investors to lose a lot of money. It seems to be the thing you shouldn't do for your investors if you're interested in preserving your investors' investment. What are your thoughts on that?
Well, I think it's 2 answers. One, building a mine that has risky geology and ends up not working out can be very painful for investors, even if it does get financed and permitted. But if the geology doesn't hang together, the integrity isn't there, we've seen bankruptcies, a number of them in Ontario in particular. So if the deposit has good continuity and exceptional grade and good margins and can work in various metal price deposits, the Island Gold Mine that Alamos bought from Richmont, for example, is a core asset now for Alamos. So you need standout assets to get permitted and then have good execution.
Are we in danger of seeing more juniors go into developing their projects because they're not able to find a buyer or they're not able to finance? And so in some ways, market conditions are forcing their hand to go to that step that perhaps they shouldn't take of actually building the thing.
We've seen examples of that already. Companies that probably shouldn't have gone into production. But I think there will be some sort of capitulation. I think you're going to see more joint ventures in this market, because if companies are trying to move down the development path and they're marginal assets or decent assets, but not fantastic assets, I think to permit as well as finance and maybe explore to have some torquey results, That's a lot of money. That's a lot of commitment. And the market may not be there for equity right now, and market can be very unforgiving on debt if it's brought on too early.
I think one of the standout transactions for me last year was Calibre Mining bidding for Marathon Gold.
Yeah.
Marathon have pretty much completed, they're very close to completing their development of the Valentine deposit in Labrador, Newfoundland. But their share price has been decimated over the past 2 or 3 years. And so Calibre, cash flowing company, saw opportunity, and that's potentially going to take them to 500,000 ounces a year production. That seems to be a really good accretive deal.
Yeah, I think so. I never covered Marathon. I did in the past cover Calibre in terms of the B2 gold assets in Nicaragua, so I know that system very well. I guess the question I was asked is, they've come along and bought it, and they could be very successful, but why did no one else come along? And so that's a lingering question for me. I certainly hope it's very, very successful, because I don't think Canada can afford to have another gold mine have a basically growing pains that we've seen in a number of cases.
In the gold space, at least, there hasn't really been a lot of competitive tension for assets. And given that, last year there's been a mega deal on the table, Newmont buying Newcrest Mining, and a lot of people have been perhaps sitting on their hands waiting to see what Newmont may or may not divest from that transaction. Newmont's promised divestments and synergies of $2 billion. So is that a factor, do you think, in why there hasn't been more competitive tension in the M&A space in gold?
I think it's a great point. That's what we've really been lacking, except for 3 of the big deals, including the base metal space. Newmont, Newcrest, Teck, and Glencore, and then BHP and Oz Minerals. I think those are 3 that really come to mind, but we haven't seen much. I think there's a risk-off trade still, but I think the stars are really aligning for 2024. There's a lot of healthy balance sheets amongst the mid-tier gold producers and copper gold producers, and I think they've had time to now look at what's on the menu and make some decisions, and that's what the junior market really needs, is some of these developers to be bought for decent premiums, make some money, recycle some funds into the sector. Osino in Namibia was a good example of an opportunity for investors to buy new things. And I think we are in an exceptional market for opportunity. Low valuations, torquey drill results. We're getting some of the best results. Peter Brown mentioned this the other day at a lunch. He was convinced that this is an opportunity in this market. Ross Beatty said that down at the Denver Gold Show. Don't see valuations like this in opportunities.
One of the common themes over the past couple of years has been capital discipline. And within that mindset, there's been a reticence to pay premium in deals. And there's obviously a very big player in the gold space that is adamant they're not going to pay premium for any deal. Is that sort of perhaps, contagion is perhaps the wrong word, but is that sort of penetrated people's mindsets such that, okay, we're not going to pay premium, we're not going to compete if somebody else is interested because we don't want to bid an asset up?
I think you're right on some level. I think, we had some crazy M&A about 10 to 12 years ago in terms of crazy or reckless. Well, where companies bought assets that really didn't work out and hurt the company badly. The CEO ended up being fired in a number of cases with senior mining companies. So I think there is a reticence. I think there's more caution in M&A, and probably for a while that's made a difference. I think some companies are more or less looking at opportunities and not as worried about the premium if it's the right fit. B2 Gold with Sabina, gold and silver, I think would be a good example.
But that's a good example because you could argue B2 got punished for that, even though, again, I agree with you, I think it was a good deal because they're looking long term, it's going to be a good asset for them. But in the short term, the market didn't like it.
Yeah, Clive Johnson argued it's not about the premium, it's about the future and what we see in the due diligence we've done. So having covered B2 Gold in the past and knowing their team and how they scrub assets, I'm really inclined to believe that they've probably made a very good decision, and they've increased their NAV exposure to a safe jurisdiction. I think maybe that hasn't really come into the stock yet, maybe until they're in production.
2024 has started with the gold price consolidating comfortably above $2,000 US per ounce. It hit an all-time high in the US dollars. It hit last year. all-time highs in other major currencies, and the US dollar's finally caught up. But yet that hasn't opened a financing window for the juniors. So a lot of them must be hurting now. A lot of them must be sort of starving now. What kind of thing do you expect to play out from this situation?
Yeah, we talked about this a little bit in December too, that it costs a lot of money to run a junior just to keep the lights on. I think there's going to be smart consolidation amongst some juniors potentially. I think there will be what I would call capitulation on a number of projects that will get joint ventured, that the seniors or mid-tier producers aren't willing to put a strategic investment into. I think there will be more strategic investments. Problem is when they get down to tiny market caps, it doesn't go very far. $10 million market cap coming in for 10% of the company, $1 million doesn't take them very far. But I think there's also going to be a culling of the players that probably ultimately shouldn't exist in this business. They'll probably disappear.
It's interesting you mentioned strategic investments from majors, because the past few years there perhaps hasn't been as many of those as one would have thought, but it seems now the major mining companies are starting to kick into gear the last few weeks, last few months. We've seen more and more of those. Is this going to be more of a trend for this year? Do you expect to see more of those this year?
I think so. I think Barrick really kicked it off with the investment in Hercules in 2023 and surprised the market. They moved so quickly on the basis of one drill hole. Obviously must have liked the region, but also my feedback is the diversified coppers, the large companies, were shocked because they were sharpening their knives to look and do diligence and understand that discovery. So I think you're right. I think there's going to be more strategic investments. They need the juniors. They need these greenfield discoveries. They need the drilling to be, high risk and them to be exposed to it somehow. So I think you're right. I think 2024 we're going to see the velocity increase on strategic investments. I think we're going to see more JVs where companies really, that is their best way to survive. And then I think we're going to see more M&A.
And that could, in and of itself, sort of help bifurcate the market between those that have legs to go somewhere and those that don't, because there's no equity market. But if the majors come in, obviously going to put the money in things that they think are robust projects or have the potential.
It's the haves and have-nots.
Yeah.
And the haves are going to attract the equity money, I think, from the few resource funds that are dedicated to exploration. The retail public at these conferences that are embraced by people covering stocks and analyzing stocks. And so I think that will be positive. And then if we can have this M&A flywheel get up and running, then I think it's going to attract more capital. And mitigate the lack of inflows and potential outflows from a lot of the North American resource funds. We also are seeing a little bit of money being raised with the private equity in Europe. That'll be really interesting to see that deployed, and what companies, specifically critical minerals, I expect to be the beneficiaries.
I want to dig more into the copper and the Hercules silver deal, because as I say, I think you hit the nail on the head when you said it surprised a lot of people how quickly Barrick moved after just one drill hole. There aren't that many copper exploration projects out there. Copper price has been ticking lower, if anything. So, the junior space in the copper side is in the doldrums as well. And yet the gold companies seem to want more and more copper. Are there going to be more of those strategic investments in the copper juniors, because they're also hurting? They arguably need more money to explore, particularly if they're in a bigger system or a porphyry system, something like that. How do you see 2024 for the junior copper sector?
I think if there's large-scale opportunities, porphyries in particular, copper plus gold, I think that's going to attract some of the gold companies to strategic investments. Copper on its own, maybe as well, because Barrick is obviously showing us through their investment, also Reko Diq and their assets in Zambia, that they're driving forward. They want to be exposed to copper-only projects as well. So I think, again, we're in a risk-off trade where it's Canada, Australia, and the US going to be the focus for a lot of the copper, capital from some of the gold producers. Not necessarily to allocate money, Also, Chile and Peru will be coming back, but I'm just starting to pivot a lot of the research more towards copper. We do a lot of copper gold, and we'll be looking to add to that in 2024 for sure. We see that trend.
To wrap up, Michael, what are some of the things you expect to see and that you want to see this year that will hopefully impact the markets and the juniors positively?
Let's see, that's a good one. I want to see some more tension in the market. I want to see some big announcements out of some of these government initiatives on critical minerals. There's a lot of money that's been earmarked by the Canadian government, but we haven't seen too much deployment. There's an innovation fund of $1.8 billion. There's a natural resources critical minerals fund of $3.8 billion. There's a Canadian growth fund of $15 billion and an electrification goal of $38 billion to be deployed in Canada, double the electrification. So I think that's one thing. I want to see that come into the developers, the ones in feasibility, get deployed, at least in Canada. That will happen in the US as well, to add some fuel to the fire and probably catalyze some M&A and offtake agreements, things like that.
Finally, Michael, where do you think, what's a good, healthy investment strategy this year looking at the sort of junior space? Where do you think is the best place to put money?
Well, I'm very thematic in jurisdictions. So we've covered the Golden Triangle for a long time. I think that's safe, good infrastructure, good First Nations. So high quality plays in the Golden Triangle, Northern BC. And also we cover the Yukon thematically, which is a little bit more dependent on some infrastructure potentially getting in place and the permitting regime to accelerate. But I think hot jurisdictions can be a really good guide for the investor. If there's one of the best discoveries in the world right now is Snowline Gold. If the light is shining on that jurisdiction, that's the spot for investors to consider, especially on the gold side.
Okay, Michael, well, thank you very much for joining us today.
Very good. Thank you. You're welcome.
And this is Paul Harris for Kitco Mining at the Vancouver Resource Investment Conference. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.